Welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Well, we wrapped up May, and I'm just going to leave it at this. This is going to be short. With the wrap up of the month of May, the S&P 500 has hit 21 new highs. We're sitting at about 11% gains in the S&P 500. And there's a main reason for that: earnings. Earnings season began for first quarter in April, wrapped up in May. Both of those months, April and May, we have seen over 20% recovery from our lows that we hit in March because of the Iran conflict. Earnings are going to drive stock prices because that's generally what you look at. You look at the fundamentals, and even if there's noise going around the market, whether it be the Iran conflict, inflation, a new Fed chair, earnings will drive stock prices. And this season's earnings, this quarter's earnings, were astounding. The mega cap tech names, those big 7 tech names that are really driving AI and are hyperscaling AI, had growth in earnings quarter over quarter. So 2025 first quarter versus 2026 first quarter, they grew earnings at 40%. That's astounding. Also, the other 493 companies in that index who are utilizing AI also grew earnings at a rapid pace of 17%. We were anticipating the overall S&P index, the average earnings for those 500 companies, to be around 12%. In fact, it was 27% growth in earnings. That will keep stocks going up. So we are now, reevaluating our outlook for the year. We were anticipating a much more moderate market in the 5 to 7% range, mainly because some of those big mega cap tech names were having high valuations, spending a lot on AI hyperscaling, and a lot of investors were getting their sentiment towards those companies where it was negative, and we saw some sell-off in the beginning of the year of those companies. That has reversed course after we've seen these earnings, and we feel that's going to continue for even the companies that are benefiting from AI. So let's stay invested in equities because that's going to be the theme. Certainly we have some challenges with inflation rising, with oil prices still in that $90 barrel range, because until we get this Iran conflict sorted, we're going to continue to see those things be a drag on our economy. The first quarter GDP came out at 1.6% growth. We are anticipating 2%. So you can see the economy is seeing a drag from these higher oil prices. And the consumer's been resilient, but that won't continue if this conflict continues to keep inflation elevated and oil prices elevated. So stay tuned, but we are going to stay invested as we move into the month of June. And we do have our first meeting with our new chair, Kevin Warsh, at the Realm as they meet June 16th and 17th this month. We don't think there are going to be any surprises there, keeping rates unchanged for the month of June, and maybe some verbiage, a little bit of verbiage change, but nothing to excite the markets. So we'll see you again with Round the Table with Gratz Park Private Wealth.